is it common news that Trump's going to use the tariffs to buy Bitcoin? I mean, maybe it's very excitable knowing that he is going to use the tariffs for Bitcoin purchases. But buy the Bitcoin, my bro. That's what you need to do. Welcome to today's live stream, ladies and gentlemen. So it's a little bit touch and go. And I will say this, that the marketplace itself is, and by the way, just forget the red top. It doesn't mean that prices are going to go down. It's just the top that was available for me to wear. Just before you guys start saying red shirt, blue shirt, and all that stuff. Or is? Anyway, I'm joking. So today, what we're going to talk about? Well, we're just going to dive into this story about the yields. We've got a little bit of a problem. Word on the street is that China is dumping bonds. But they have been, so that's nothing to be too concerned about. But China's also done something that could really trigger a little bit of a problem, create a new economy, and really stick it to Donald Trump. So make sure you stick around for that flavor, ladies and gentlemen, because I personally think it's going to start some interesting behavior across the board. So if you are new, be sure to like and subscribe. Do you know what? That should be the first thing you do. I'm joking. You don't need to do that. No, you do need to do that. Just do it, man. It doesn't cost you anything. Anyways, let's get with the program. So let's get into the macroeconomics of things. How are we meant to understand what's going on? So treasuries. I'm always talking about the treasuries because that's going to tell you what the big money is doing. If you're looking at indicators before you take trades, you're missing the bigger picture. Try your hardest to just pay attention to what's going on with the bond market. That's going to tell you where $145 trillion is going to go. So, it says here that Treasury term premium jumps to decade high on policy uncertainty. Is the Fed going to increase the interest rates? Decrease the interest rates? Are they going to hold? Is inflation going to go down? What's it going to do? Is tariffs going to be a problem for inflation? Is Trump really just playing madness with the marketplace? Investors don't have a clue what to do. Going into the article, it does go on to say that the so-called term premium on the 10-year notes climbed to 0.71, a level last seen in September 2014, ladies and gentlemen. Okay? That is very, very interesting. And this actual rate itself is effectively the premium is the compensation investors demand to bear the risk that interest rates will fluctuate over the life of the security. So that effectively means that when we go into it, the 2-year yield is it's now at 3.851%, going into the 5-year at 4%, and then we've got the 10-year itself trading positive at 4.39%. Hold on. 2-year is down marginally, but the 10-year is up 0.21%. What's going on there? Well, that in itself, ladies and gentlemen, tells you that there is more of a demand from investors to want to buy the US bonds, but they want a higher premium for it. They want to earn more money from it. Okay, and the only way they do that is if they are offered a higher rate of return. That tells you that investors are still uncertain about the environment that we've got right now. Now, going into it all, we've got this story here about Trump. Now, you may remember he said nobody's getting off the hook, and just recently he announced the levies on the electronics, but it is going to still go back into it. So those tariffs are still going to be on electronics. He's just giving the market a little bit of freedom to just make a bit of cash because investors are concerned about where they're going to be putting their money. They don't know what's going to be happening with the policies, and it's really causing this wait and see mode. And I don't know where to put my money. If you're a hedge fund manager and you've got people's money to put to work, there's nowhere to go, in essence. Forget little movements to the upside and to the downside. The investors aren't looking for that. They're looking at for then every quarter, what's going to be the rate of return? And right now, Trump's got the market at a stronghold, or the strangling the market, because there's no clear definitive direction about where it's going to go. Is it a bullish market? Is it a bearish market? Well, look, let me explain something for you. Today, we have got Trump's calendar, all right? Forget this calendar. I said it. This calendar is pointless now because we don't need to worry about it. Why? Because economic data that comes out, the market doesn't even react to it. Inflation was down last week. Did the market do anything? No. It didn't even react to it. And that is a CPI data, man. inflation came down and the market was like, so what? Today, we do actually have the Empire State Manufacturing Index that's recently come out. We just quickly review that and what that reading was, minus 8.1. So it's actually expanded, but it's still negative in its reading. Inflation for the Canadian dollar did come down to 2.8%. So that is happy days right there. And of course, CPI month on month right there came in at 0.3%. So it's lower. So that's good news for the Canadian dollar. But this is the calendar we need to pay attention to. This is Trump's schedule today, 9 a.m. in-town pool call time, okay? So whatever's going to be happening over there. Official schedule says here that the president and the vice president will have lunch. What are they going to talk about? It's a private dining room, closed press. So we're going to be hearing if there is going to be any word from this. Now, what are they going to talk about? Are they going to mention anything about tariffs? What's the story, okay? Then we've got this press briefing by the White House Press Secretary Caroline Leavitt. And she is pretty beastie, to be honest with you. She will say tariffs are not negotiation tools, or whatever she has to say about the tariffs, the market may react to that. We also have the president signs executive orders. Again, this guy, man, is he a president or is he a secretary? What's he doing, man? All day, every day, signing executive orders. Just do your thing, stay in office, go and visit everyone around the world. Just cut out with these tariffs, man. Like, come on. But we need this tariff story because it's what's fueling volatility. So if you are trading within these environments, be very careful. I mean, swing traders might have it a little bit hard because of the wild volatile price swings that we're seeing across the board. I mean, if we just go over to the volatility index, in terms of trend behavior, what you're looking for with the volatility index, you want to see the volatility index trending, okay? Because that tells you that sentiment is maintaining itself. For example, you see this trajectory move to the upside on the volatility index. The idea is that they are favoring offloading positions. So the stock market goes down when the volatility index goes up, okay? When the volatility index goes down, the stock market goes up. And you see this nice move. You had a move from where? 21st of February? Going all the way towards March the 11th, you saw a nice drop to the downside with markets across the board. Then from March the 11th all the way down towards 26th of March, you had everything making moves back up again. So that's the trend. You want to see trend. So swing traders, you really want to be focusing on what the volatility index is doing if you're going to be trading the indices like the NASDAQ and the S&P, and when you're trying to do swing trades on that logic, okay? But look at where we are right now. This is clear as day that there is no consistency behind where assets are going to end up. Investors are in and they're out, up and down. And this is starting to cause concern in the marketplace. But let me bring to you what the real concern is right now. Check this out. Have you seen this guy? China have actually relaxed confidential clauses about luxury products, okay? This guy's exposing everything, all right? He goes and he talks about how 80% of luxury goods are made in China. And then what they do is they get sent out to these suppliers with your Hermes bag and your Hublots and your Chanels and what have you. They package it up very nicely and add a few more zeros onto it, and then happy days. You're paying the premium, and then the same bag that you see in this room right here is probably going for like $100. And you're paying 5-6 grand for it. That is wild. But do you understand why that is a problem? Because most of these luxury companies are, in essence, conglomerates. They're businesses within businesses, okay? And when that happens, you're going to get a domino effect, which is what I'm saying about a new economy is going to start. So China's got a tariff of 125% business to business in principle, okay? Anything that the US buys, there's going to be a tariff. Anything that China buys, there's going to be a tariff. So what better way to do it? Why don't you start attacking the consumers? Because businesses will be going together to buy for the consumers. Well, what's going on right now is people are going to be cutting in on to the idea that all these luxury items are still going to be made in China, and they're still just China-based products, okay? All the materials are from there. So why would you pay a premium for it? So what's going to happen now? These manufacturers are providing their URLs and telling everyone to go and buy from them. What does that do? It effectively eliminates your Amazon. It effectively eliminates even bigger businesses to be communicating with people, because people are going to be buying from them. And when you've got the shipping time story as an issue, well, they're going to be doing their very best to make sure that they get the products out quickly, okay? I personally believe that this story here, with China relaxing the confidentiality clauses, It's a big stab at Donald Trump, in my opinion. Get the consumer to go directly to these guys. You're effectively undercutting the story of the tariff. See what I mean about China, man? They play some dirty movements right now. It says here, series of videos published by Chinese factory owners and suppliers of bags and beauty products have flooded the feeds of millions of users, especially Americans. Essentially, they all claim that almost all European luxury is secretly made in China. The most widely shared video is by a certain gentleman, a Chinese man who appears to speak as the owner of an unidentified factory and claims to have been supplying a huge number of European luxury brands for 30 years. So I'd be looking at all these luxury brands like your Louis V's and what have you, all the companies that are listed on the stock market, because this is going to take a stab at these guys. It really is. And you can see what China's doing. It's going around things differently. Speaking of China, Mario Nafal, how you doing, my bro? So he's effectively shared the idea that China's midnight move is they're dumping debt. Well, they have been dumping debt. Look at this. China's total holdings of US Treasury bonds has been going down. So it's nothing that we're not familiar with, but we're seeing that it's actually having an impact. 2 year is up, the 10 year is, or the 5 years up, the 10 year is up. So you can see that they are actually trying to counter whatever Trump's doing. And I personally think that Trump is going to get pushed into the corner. Okay. But he won't let the world see that. But the world will be like, yeah, he's kind of screwed it right now. Your dollar is depreciating like no tomorrow. Your bonds market is absolutely worthless. You've increased the debt ceiling yet again for another 2 years. You've undermined the idea of holding US debt. And don't get it twisted, they can actually cut the credit rating of the United States debt. They can drop the rating. They did it last time, and then they said it's not good look for investors, so they brought it all the way back up again. But the sheer fact that it got cut, well, I mean, come on, man. That is just dog, that is. You know, you get a rating that cannot be changed across the board for any other company. But when it comes to United States credit, nah, you're not dropping our credit down. There's no chance you're doing that. In great news as well, BlackRock increases Bitcoin holdings with a $36 million buy. Well, not personally BlackRock, because the article does go on to say it purchased 430 Bitcoins, approximately worth $36 million, through its spot Bitcoin ETF. The move signals ongoing institutional interest, which leads me to this story right here. Where is it? Where's my thing? I did highlight something very interesting today. Here we go. So public firms now hold 688,000 Bitcoins. Look at where your Bitcoin's going, ladies and gentlemen. There it is. Your Bitcoin's going, right? How mad is that? I'm telling you, this story with Bitcoin, regardless of whether Bitcoin goes up or down, this sheer accumulation for me is a money heist. It really is. You sat with all this ETF Bitcoin right there. I mean, nothing much has been happening with the ETF. Just quickly review this just to put it into perspective on what the actual blockchain is showing us. And we can see that the blockchain's not really showing any activity. Quickly going over into the price action of Bitcoin. Now, we've got this story here, okay? So there are quite a few number of offers coming in. And for those of you that are new, whoa, 85,911. Where are we at? Hold on. Wow. Okay, so 85,911 is logically the next spot that we really need to see price going into. Why? Because that order there hasn't been fully transacted. There it is. So 8.5 million has been transacted at 85,911. 33% of the order has been claimed, but there's still 25 million more to go. The logic would say that you would assume that Bitcoin's price is going to go up from that point. Okay. Now, what you've got to take into consideration is where investors' heads are at. And this is the problem that I've got. Looking at Bitcoin's offering here, that means people are prepared to sell it. It's too highly concentrated to a specific range, okay? It's too close to price. And what does that tell me? Well, it does give me the idea that Bitcoin could be experiencing a nice volatile move, but just as good as the move comes up, it will then come straight back down again. Now, when you look at Bitcoin's price action over this term with regards to Trump and the tariffs, you can see that there's not been really any time for trending, okay? They've simply just been sending Bitcoin up, and then anything that they've marked it up with, they've brought it all the way back down again. Big fast move up, happy days, and it's just come all the way back down again, back up and down. It is a swing trader's nightmare when you're waiting for it to actually break certain structures to see prices going higher. That's why I say trading Bitcoin, it's all about scalping right now, in my opinion. You've been sat waiting for Bitcoin to do something in this range, and it hasn't really given us any conviction of a move higher yet. However, look what's happened today. So the death cross traders are all in anticipation of Bitcoin coming down. The golden cross traders are in anticipation of Bitcoin going up. But where are we? Right now, we're just flat. The 50 EMA and the 200 EMA are flat on the daily. Now, this is very important, and I really want to just stress this to all the holders, okay? You've got this range right here on Bitcoin, and this is a zone that Bitcoin between 88,520 and 86,88, okay? This is important. To solidify the idea of Bitcoin continuing its move higher, you need to see Bitcoin trade inside of this cloud, which in principle, we'd need to see it get above 87. Once it does succeed that region, a retest back into that 50 EMA would solidify whether or not we're going to continue higher, okay? Logic says that Bitcoin in principle should have been much higher than what it was. But then that could also mean that there's a manipulation happening on Bitcoin and they are accumulating a lot of it. Stick with me. The logic of the dollar. Dollar dominance right now is just taking a smack to the downside. That's only because investors, they're not even engaging in US bonds. They're not interested. They're going into other assets and safe havens. You've got the Japanese yen, which is now trading negative. You've also got the euro itself. Where's the euro? Euro's trading negative for the day as well. She's taking a bit of a stab to the downside. And of course, the hype behind the euro, given that the euro itself is starting to see a reduction in offering of credit. So a lot of banks are actually starting to see a slowdown in the number of credit that, and well, should I say, they're a little bit more strict with their release of credit with regards to the euro. So that could be a sign that there might be a bit of a problem moving forward with credit in the eurozone. So that would effectively mean that euro could be on the move to the downside and start consolidating after this wild move to the upside, okay? One thing I will say to you about Forex, guys, is the concept of value is massive, okay? When something is too overvalued, okay, especially when it comes to foreign exchange, there are people thinking and talking about extracting that value. Euro right now tells you can buy a bag load of dollars, okay, off the back of this strong euro. The pound itself is telling you can buy a bag load of dollars off the back of a strong pound, okay? So that is two currency pairs that are giving me real purchasing power, okay? I can now take my purchasing power, okay, from a pound and the euro, and then I can then get myself some dollars, because what if the dollar is going to get ready to reverse? At what point will the dollar start to come back up again? Because what Donald Trump's doing is screwing short-term what's going on in the market, but it is actually in the favor of the dollar, okay? So we've got to be careful, because we are going to see a turning point in the dollar, and the problem that I've got is dollar's drop to the downside has not actually facilitated Bitcoin's move to the upside. It's followed the dollar dominance. Now, that could be a means for accumulation, but what we need to see is we need to see Bitcoin really moving as fast as it can to the upside and clearing out 88 and holding above 90, because the dollar dominance could start working its way back up again. And if the dollar starts working its way back up again and Bitcoin hasn't actually made its move higher, because look at all this information they're giving you. BlackRock's buying that. You've got public firms that are all pumped about things. Donald Trump's going to use the revenue to buy Bitcoin. Could it push it past 90K? If he comes out and says that we're going to get the revenue from the tariffs and we're going to go buy Bitcoin, then wonderful. Bitcoin's going to go up. You're going to see Bitcoin make a nice little move to the upside and probably try and reclaim back this wick, probably even try and go up to 96,000, hit the 100K mark. We have a problem with the tariffs. Inflation's gone back up again. The interest rate's going to stay high. Dollar yields go up. The dollar dominance ends up going back up again. What have you got? You're back to shit street. Stock market. Where's the Nvidia? Like they've had some good news on the expediting of certain products. But, I mean, 35% value. That's what's going on right there. Let me just show you something. Stock bond ratio. Look at this. And what's this? Hey, Tina, what about buying in the bear market and sell the top of the bull market? Well, yeah, that's logically what you do. You buy during the bear market and you sell during the bull market. That's what it is. But you have to position yourself for it. How long is the bear market going to be? Frankly, we are in a bear market, okay? We're in a contractionary phase. That's good news. Because if you're the type of person that wants to buy assets at expensive prices, then you're going to mug yourself. You really are. Why are you going to buy at high prices? Because conventional trading wisdom tells you when it's rising, it means there's strength. But what they forget to include in that little comment is on the assumption you bought it back in the day when it was worth nothing. And that's what you got to really say to yourself. You got to say, hold on a second, man. Is now a time to buy stock? Stock bond ratio is showing us this doesn't make sense, right? When this is high, so basically the idea is that when stocks are overvalued in relation to the bonds, you can see that when it peaks out, when the stock market peaks out, see this little green area here, green line? So look at the correlation of price up there. So that in relation to bonds. So that means stocks are undervalued in relation to the bonds. Okay, that's where you then see the stock market going up. So investors that have been locking in liquidity in the bonds market are now going to be seeking higher risk. So they're going to go over to the stock market because they're in relation to the bond ratio, it's saying that bonds are overvalued in comparison to stocks. Recently, we had that stocks were overvalued in comparison to bonds. Go back in the live streams, ladies and gentlemen. We've been talking about this and highlighting the fact that we are at high levels on the stock bond ratio. We're expecting the bonds to come up and the stock market to go down. Well, we've had that, okay? Now we're at a point where our stocks cheaper in relation to the bonds. But the problem that we've got is we are going to probably end up seeing that the yields are going to keep on going up on the inconsistency of where we are with policy. And if we don't know where we are with policy, yields are going to keep going up and the bond's going to keep going down. High risk assets are going to experience the pain of that. And then the only thing that's going to be winning is Forex. Dollar down, 10-year bonds down, euro up, yen up. Any pair against the US dollar will be going up. Aussie dollar up, Kiwi dollar up, New Zealand. Okay? Focus on Forex to work out if they are going to be buying with their dollars for Bitcoin or the stock market. Look at this. The NASDAQ right now, okay, and you'll notice this, okay? Let me just change this up. You will notice that when NASDAQ goes up, the euro goes down. Is it a phenomenon? What does that mean, Tina? What is that? How are you using the NASDAQ to dictate and the euro to work out if they're going to be going up or down? What's the correlation right there? I wouldn't say it's so much a correlation statistically or fundamentally, but it's a representation of value. Your stock market's going up. What do you buy stocks in? NASDAQ? Rings a bell? Dollars. So, if I put the logic to the test, dollar dominance right now is taking a smack to the downside, right? Okay. My purchasing power is dog shit. Okay. Shall I go and buy some stocks? Well, hold on a second. What currency pair right now is doing really well? Well, it's the euro. Euro's been sailing to the upside. Okay, cool. So that means what? I can now go and get my euros. I can sell them and get a shoe bag ton of dollars. Then I can go and get my dollars and buy a load of US stock. That would then fuel the dollar dominance to start moving back up. That would then fuel the stock market to start moving back up. Euro's coming down. NASDAQ is starting to go up. So the idea is that when NASDAQ goes down and the euro goes up, it means that foreign investors are transacting on dollars because they believe now that they've got themselves a value on the euro that will allow them to net enough dollars to go and get themselves some stock for a period of time before they then unwind. That's what's going on now. Okay. Now, have we mentioned any indicators? Have we mentioned any market maker behavior? Have we mentioned anything? No, it's just the basics of value. My purchasing power on my dollar is absolutely flawed right now. Okay. But I know I can get my dollars and I can get a lot of them and I can go and get myself a lot of stock. I'm going to take the risk and do that. And that's what effectively is going on right now. NASDAQ's moving up. The euro is moving down. Okay. Hell, they're even transacting on the yen. That means they're selling yen and going into what? Oh, they're going into dollars. Oh, could they be taking advantage of a carry? Maybe. Is Aussie yen going up? Well, let's have a look. Oh, Aussie yen's moving up. So that tells me they're in the carry. So that tells me they're now actually borrowing yen or dollars, converting it to Aussie to then get Aussie to use that to buy stock. Genius, isn't it? And that's from Forex. So then you take all that information and then say to yourself, Bitcoin. Fuck the glass node and all of that. That's the limitation of a small marketplace. You're focusing on who's buying crypto. I don't want to know who in crypto is buying crypto. I want to know who out of crypto could buy into crypto. And that's why you wait for little articles like this with super fat nostrils like that. Fill it with Bitcoin, ladies and gentlemen. That's what Larry's saying. So when you have an understanding of how the Forex markets work on the perception of value, I mean, George Soros, when he shorted the pound, was it? Or was it the Swiss franc? What was it? The Swiss franc. He made a killing based off the idea of the value of the Swiss franc. Someone just remind me what it was. Basically made $1 billion in a day, okay? Because he saw it was overvalued. And that's the thing about Forex. It will give you the idea of the perception of value, which will then naturally take you over to why Bitcoin could move up. Ain't no indicators ringing, all right? No bells and whistles. It's the collective of human nature. And you're understanding that. Euro coming down, the NASDAQ moving up. So that tells me they're transacting on US stock right now because they believe it's at a discount. The levies on the tariffs. It's going to be okay, ladies and gentlemen. Buy, buy, buy. That's what's going on now. The idea of value right now. In the next 2 hours, Trump could turn around and say, screw it. We're going to hit China with this tariff. Everything comes down. And remember, they're transacting hundreds of millions of dollars over short periods of time, okay? And it's fulfilling their needs and their desires. You want to see the proof of that? There it is right there. Look at the NASDAQ. Look at it. It's just up, down, up, down, up, down. Look at this BS. Here you go. Look at that. It's, how do you project that? You just don't. You just look at it and say, wow, you know? But we've got an idea that the value of the market could be going higher because euro's going down, dollar's coming up. Euro's already extended to the upside. I'll make the assumption that it could continue higher. And then that is where you start seeing the NASDAQ making a move to the upside on that principle. So when you next want to look at buying something, have a little gander, right? And just pay attention to what's going on. Does that make sense, ladies and gentlemen? Have you got a link for that confidentiality article, bro? It was just some bird on TikTok that said China's oversaw the confidentiality clause. She hooked me up, man. So that's all it was. Any questions, ladies and gentlemen? Any questions regarding that conversation? None of you have said anything. Okay, cool. We'll go with that one. Hold on. All right, traders. Any of you trading? Of course, Isolate now is available on BTCC, but you've got to access it from the Perpetual Futures Pro mode. Okay. So if you're not with BTCC, get involved in that flavor and become a member of BTCC on this bright white screen, which is our preferred exchange. Never mind, but just go to the description. Everything you need is in there where you can trade the logic of NASDAQ. What I've just told you, basically, you can trade that. You go to Forex, load up your shorts on Euro, load up your longs on the NASDAQ, which is the Tech 100, and load up your longs on Bitcoin, hypothetically, and take advantage of that flavor. Capiche? Wonderful. I hope that makes sense, guys. How long do bull markets last compared to bull? There's no time with bull markets and bear markets. It's not really a time. Tino, idea. Here we go. What about the idea? Fed cuts interest rate. Hold on a second. I like this talk. I like this talk. Let me just read it. Hold on. Fed cuts interest on yields, so they're going to be interesting for investors since they're always faster than the Fed. So buy it immediately, therefore stocks down. The problem is if the yields shoot up so much, that will force the Fed to cut the rates just to bring it back down again. Okay? But the problem is the only reason why the yields are going up is because investors aren't accumulating rates. They ain't accumulating the bonds. So even if the Fed does cut the rates, it's screwing them. Why? Because investors aren't showing an interest now at these levels. And if they're not showing an interest at these levels, what the hell would cutting do for them? They're not going to want that. So that's why we're looking at the actual bonds market, and they are still expecting the fact that they're going to keep the rates high because the Fed is in an expectation that the yields are going to continue up. That's what I think's going on. You had inflation come down at 2.4%, man. That is brilliant, isn't it? Market said, no, it's not. We still want more money for taking on the risk of your US dollar because your US debt is dog. Never mind. Tino, I need a trading strategy in this type of market. Can you please let us know how you looking to trade these days? I'll be frank with you all. It is very hard to trade these days. It is. I mean, I took a scalp this morning on a small account on my Ninja Trader. I only made $800. And to be honest with you, scalping, it's getting hard because you don't know what someone's going to say. Some bullshit's going to be said very soon. And I'm just like, oh, I got to wait until Trump's either sleeping or eating. And even then when he's eating, he can just projectile, vomit, whatever. I've still got the cool shoes at the back. But anyways, the best way for you to do it, ladies and gentlemen, is the best strategy, in my opinion, is to scalp. Okay, that's my fundamental belief when you are trading, and you have to be fierce with it. You have to be aggressive, and you have to just cut your losses and keep scalping. But use light size, because with light size comes the idea of being able to execute volume. The more volume of trades you can get, the more feedback you're going to get about specific positions that you've taken that you can retake again in the future. But you've got feedback from it to say to yourself, okay, I was wrong that time. Maybe I look back and have a look at what they were doing beforehand. Can I correlate the information? Because I will say to you this, the hybrid system is about practice. It's all about practice. Recognize the variation of how price can move from one point to the next and collate that with the vector candles. You've got history repeating itself. You really do. That's the truth. If you are completely new to it, guys, take this free course. This free course carries all that information that you need. You can build strategies behind the free course. I know you can, because there's various aspects to it. Okay? Just off the psychological levels themselves, you can build a strategy behind that. I talk about it. I give you strategies inside of this free course. If you watch it properly, you'll understand what I'm talking about. Take the little the quizzes, you'll get that, okay? You want to expand on it more, you become a platinum member. Simple as. You'll get the strategies right here. These PDFs. Red vector candle strategy. You've got the Brinks box strategy, the block vector the block principle. These are all strategies. The breaking down the macros, how I use the macro information to help me understand if price is going to go up or down. I just break it all down for you. That's a little checklist. So you get that with the platinum membership, ladies and gentlemen, on the Traders Reality website, which is pinned to the top of the chat. Okay? Happy days? Are we good? Tino, you from Italy? No, I'm Greek. Anything else? When scalping, would you suggest a 1% take profit? No. Don't stick to a fixed amount. Take what's given. Take what is given. Fix your risk to a fixed amount, but never fix your profit target. Never. Take what is given. Because if you're going to be bitching about, oh, shoulda, woulda, coulda. I mean, I've done it before, man. I've bitched to you about what money I could have made, you know. But, you know, when you miss out on making 80 racks in a day, that kind of makes it a bit fucking sour for you. But go to bed and sleep like a baby and wake up every 2 hours crying. That's so funny. I've heard that so many times, but it's true. Anyways, listen, mad love and respect. Hit the like button, subscribe. Going to be jumping into the Discord right now, breaking it all down for the Platinum members. So if you're not a Platinum member, get involved if you want to get in part of that Discord flavor. But the other Discord, the general chat, is free. So get involved in the Pattern Watchers Discord if you want to check it out. And Bitcoin's making a move. So we got to make a move too. Mad love and respect, guys. I hope you've enjoyed today, and I'll tune into you all later on. All right? Peace. Stop winking.